Shares of Whole Foods up this week after second quarter profits came in higher than expected, but same-store sales were actually down. John Mackey, co-CEO, sits on the board of directors here at the Motley Fool.
Yep.
I feel like this was a Rorschach test kind of quarter. Depending on what you feel about the company, you could find something that you liked or didn't like.
It's a competitive market out there, and they're really continuing to struggle. They're 2% traffic decline, almost a 1% basket size decline. They're attempting to discount and use promotions to help the business, but they're struggling. So they're really turning to this new 365 store chain concept to try to revive things. So, they had to cut full year guidance, sales and profits. They did buy back a lot of stock. They continue to do that. I applaud that. But times are tough. They're struggling.
Did they give any color on when they're going to start rolling out the 365 stores and how quickly?
We'll see the first one this month in May. They've signed 19 leases so far. That's really probably just the very beginning. I expect to see a lot of them. But they'll go slow, test it, and see how it works. But I'm hopeful that this will revive them. At least let's see how it goes. But I'm hopeful.
Whole Foods always earn this premium, mega premium multiple in the market because there was a lot of growth. They were doing something a little bit different, and we've noted how over the past few years the competition has ratcheted up, and more stores are really offering all of the same kind of stuff. I can't help but wonder if this isn't the kind of space that's going to go the way of your drugstores like CVS and Walgreens, Rite Aid, maybe even to a lesser degree, where it becomes less really about where you get it as far as the brand that you're buying it from, and more about just what's most convenient. Is it easier for me to get it from store A on the way home or go a little bit out of my way to store B? I think at the end of the day, when you all things being equal here, it's a bit more about convenience. And on that note, I do think it's important that Whole Foods is growing out their relationship with Instacart for delivery and things like that. So we'll see more and more of that stuff, I think, as time goes on too.
I will say, since the stock has been relatively weak, certainly over the last year, down almost 40%, that if they can figure this out, the stock looks relatively inexpensive here, maybe 6 or 7 times EBITDA at the moment. I'm in a wait-and-see mode. I'm a current shareholder now. I'm not adding, but the stock's not expensive, so it could be interesting.